when we take a look at, like, let's just take a look at GDX here. I mean, we've got this long consolidation. I think we could get right back up into this 45, 46 level, these previous highs. And then I think it could break that and go way beyond there. So I think there's a lot of upside potential in miners in general. And when gold starts to get up near that 2000 mark and starts to break out above that level, then we're going to see the miners, I think, really go ballistic. So I think there's a lot of potential for 100% return type thing in the gold sector, in gold miners, silver miners. I think they're going to have a pretty big move going
100%.
forward.
So 100% returns in the miners. You're talking about the junior side or the seniors?
The GDXJ more or less.
Okay, GDXJ.
And the SILJ. I think they've got the real explosive type of potential. I mean, the large caps should do well also, but obviously you get bigger returns with the smaller cap stocks.
And 100% return. What are you basing that on? Are you looking at specific catalysts that'll push it up, or are you looking at the chart patterns? How did you come to that conclusion?
Yeah, if you take a look, like, you can use a bunch of different analysis, but if we just take a look at the Fibonacci extension tool, we can look at this basic momentum target here. So based on where it is right now, we're looking at potentially this whole kind of consolidation and noise phase. We're looking at roughly an SILJ about 65% to the upside. Now that's just a really rough target based on this initial run and pullback. Overall, when we see gold start to break out, which if I take a look at gold is just starting to break out on the daily chart. And if we take a look, I mean, gold has this big pattern. Let me just go back one step here, David. If we go back here and take a look at gold, it's got this massive cup and handle formation, which is pointing to $2,600 gold. So as gold starts to break out to these new levels, this is when the gold miners are going to really start to take off. So we're going to have this resistance level. This one right here, it just broke. The next key one is really going to be right here. And we're going to have another significant one here. I think once gold gets above this 1965 area, that'll be two really, really significant levels on the chart where this whole kind of consolidation will have fully changed direction. It's now in this new leg higher. And that's when that breaks, I think that's when gold miners are going to go absolutely ballistic, because that's when long-term investors are going, okay, this is in a new renewed uptrend. It's broken all the major resistance. It should have enough momentum here to carry itself to 2,600. And that's a huge, profit for the gold miners. So I think a lot of it's going to hinge around gold. It's going to be a very emotional play. A lot of people chasing prices up, which is how the markets move. And I think we'll see like another leg, just like we saw over here, a huge rally to the upside. I think that same thing will eventually happen over here as gold goes up to 2,600. So a lot of it's going to come down to gold having broken out of this huge kind of year-long consolidation.
Well, could this still happen at the same time? Well, you mentioned it probably won't happen at the same time as the stock rally. Now, you mentioned that you like tech sectors, the tech sector and the financial sector. So these are risk-on plays. If the sentiment overall in the markets is more risk-on, why would people be piling into gold, which is seen as more of a risk-off safety hedge instrument?
Yeah, I think people are still worried about currencies and what's going on over in China, the Everglade, the issue there. I mean, you look over in Asia, gold is a huge thing. I think that's part of the reason why we're seeing actually gold move up is because we're seeing probably a lot of money over there saying, where do I go? I mean, they're nervous to go into different assets, and gold is kind of, rock solid. And so I think we're seeing money rotate into there because investors don't know what to do. Overall, I think we're going to see gold continue to hold up as a global safe haven. That's the nice thing about gold is it's not just what American stocks are doing. It's actually what the whole world sees as risk. And Asia is a huge chunk of the population, massive money over there. When it gets nervous, it's going to be looking to go to maybe the US dollar, US stocks, probably want to go into gold. It's kind of one of their favorite assets, right? So that we are seeing that shift. I think that's part of why we're seeing gold move up and hold its value. So we can see gold and gold stocks rally with the stock market. I'm just saying, I think the gold and silver miners will become the market leaders a little bit later. I think they could rally with the stock market, but I think they might be outperforming technology and all that stuff down the road when they become really a hot commodity because gold is breaking out, right?
Right. You said gold is rock solid. Pun intended, of course, right, Chris?
Yeah, yeah.
Uh, you mentioned interest rates would rise, and well, some people would agree with you that eventually they should rise. Wouldn't that put downward pressure on both the stock markets and the gold markets?
Yeah, I mean, obviously, if you're going to get a better, higher yield somewhere, I mean, the yields are so low right now. I don't think it makes it's a huge concern. I mean, you're way better to take the risk on and be active in the stock market than
Mm,
plop your money somewhere for a 0.5% or something like that. When rates start to get a little more substantial, I think it could be, it'll have a negative impact on the markets in general. But right now, the rates are so low. A little bump in rates is kind of good for the financial sector, for financial stocks, which
yeah.
is why I like the financial sector. But there's just not enough rate there, I think, for people to bail out of the stock market and go look for some
So
bond or something like that.
overall, you think that the markets can handle a little bit of a rate hike?
I think they can. I think it'll be fine. Yeah.
Okay. Now, you mentioned that after this explosive rally, well, particularly with the stock markets, we might see a crash. Is that why do we have to see a correction? Why can't it just stabilize and keep going? Or is that
It
yeah,
could. Yeah, it totally could stabilize. I mean, when you look at the perfect example is the Russell 2000. The Russell 2000 had a massive rally. And what did it do? It just went stable. It created a strong base, and now
mm,
it's launching out of it. It does not have to crash. Um, the crash is going to be determined to me how we get to those lofty levels. If we see the stock market just go absolutely ballistic and we see money flow go into a whole whack of, large cap stocks and momentum stocks, and people just drive the market straight up. If this 30% rally happens in like a 2 month window, and sentiment just goes completely extreme, that everyone is just dumping in, that's usually a sign of a market top that usually is followed by a very sharp crash and correction that takes a long time. But if it takes several months to rally there,
I see.
and then it holds its ground without huge volatility, then it can do exactly what the Russell has done here. It just chops around for a bit. It stabilizes. People who are nervous, they sell their shares. People who are comfortable, willing to hold long term, they accumulate those shares, and it holds its ground. So it's going to be like, do we have a bubble blow off phase in the next couple of months where it just goes pop and the market goes straight up?
Yeah.
And usually, what goes straight up like that when it's an emotional trade, it'll come straight back down very quickly. And how the
Mhm.
market reacts after that pop kind of stalls is going to kind of determine, hey, is this going to be a consolidation, or was that like a top and we're actually going into like a crash phase, like a
Right.
bear market phase? We won't know until we actually see how the price gets there, right?
Just one note about gold, because you talked about the speed at which something rallies. So if you notice in the past bull rallies for gold, 1980, 2011, last year, for example, all those
Okay.
three rallies, we saw gold spike up. Well, actually, in 2011, over a number of years, but it fell dramatically afterward. I don't think in any of these examples you had gold perform like the Russell 2000 that you just showed, where it just sort of topped for a while and then showed a bit of an uptick later on. In all these examples of prior bull rallies, gold has spiked dramatically, outperforming other asset classes, but then fell back down. So, um, I mean, is that just the way gold behaves, you think?
Yeah, gold. I mean, gold has these very explosive moves. I mean, when we go back and we look at any of these kind of corrections along the way, we see price go up. It goes ballistic for a little while here. It looks dwarfed on this chart simply because um, we're zoomed way out with some bigger price action. But when price starts to go ballistic and goes straight up, week after week, usually it's going to come back and give back that last euphoric push. And this is the push that I'm talking about. We could see in the stock market. We just see this really strong, everyone piles in, and then it's going to come right back, and then it's going to consolidate. And the question is it going to consolidate, or is it going to go into a bear market where it goes down? Now, gold held its ground here, and then it went off, and it ended up having another one where we can see here it had a huge run up. Eventually, it gets into this really strong phase where it starts to get consolidation. It breaks down and it has a consolidation. This was a bit more of a correction. Obviously, gold pulled back. I think it was like
Yeah, yeah, keep
30,
going.